Happy Friday traders, this is Fawad Razak, the market analyst for City Index. Today is the 8th of August. So the US dollar has bounced back a little bit from technically oversold levels. The rebound comes against a backdrop of weakening economy and rising bets that the Federal Reserve will cut interest rates in September. Meanwhile, a split Bank of England caused the pound to rally sharply, causing the pound against the US dollar to climb back above a key technical level, which I'm going to cover in a minute or so. But we do have lots of economic reports coming out next week from both the UK and the US, starting with the CPI report. Actually, we have the wages data from the UK on Tuesday, which is really important. Then the focus will turn to inflation data from the US, starting with the CPI report. We have more inflation data later in the week, namely PPI on Thursday, and then the University of Michigan's inflation expectation survey on Friday. From the UK, I mentioned we have the average hourly earnings on Tuesday. We'll also have GDP data on Thursday, which should be important. There will be a couple of other economic reports as well from the UK to keep an eye on, released at the same time as GDP. Elsewhere, we have a rate decision to look forward to from the Reserve Bank of Australia, who surprised the markets last month, didn't they, by holding policy and changed when people were expecting them to cut rates. But this time, it looks like everyone is expecting a rate cut to 3.6%, which should be priced in. Elsewhere, the key data to watch is from China. Retail sales and industrial production will be released on Friday. So there'll be a few economic data releases that could cause a bit of volatility, but the dollar has been weakening in recent weeks because of weakness in data. It has found strong resistance from that 100 level, which we had highlighted previously in one of these videos. It is, however, bouncing back a little bit today, finding some support at around 97.90 area, which was the base of the prior rally. It's worth noting that the dollar has formed a couple of higher lows here. Whether or not that is a sign of things to come remains to be seen, but from a bullish point of view, we do need to see some further bullish price action before we can say that the downward trend is over on the dollar index. For me, the reversal signal could be a potential break above that 100 level. Unless we see that, the path of least resistance remains to the downside. Now, one interesting currency pair to watch, given that we have lots of economic reports coming out from both sides of the pond next week, is the cable, which is showing a very interesting pattern, or a series of patterns, I should say. It has formed a potential double bottom here at around 130-140. On top of this, you have a continuation pattern that the cable has been stuck inside throughout the summer. And at the time of recording, it was testing the resistance trend of that pattern. In terms of resistance, 135 is going to be important, and then above that, there's not much further resistance or obvious resistance until the 135.88 level that was formed at the end of July. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.